Assalamualaikum warahmatullahi wabarakatuh, and good evening to Dr. Rozaidi and all of my friends. Today we are from group number 5 are going to present the tutorial answer for tutorial question on the topic accounting for suku or accounting for investment in Islamic securities. Without any further ado, let's start to the first question. For question number 1, basically it requires us to prepare the journal entry for the investment securities made by Bank Syariah Malaysia Berhad in different companies according to the AAOIFI Standard 17. Here to mention that the company in the blue table is the investment in terms of ordinary share, and the company in the red table is the investment in terms of suku. The first investment occurred on 1 January 1995 when Bank Syariah Malaysia Berhad acquired 1.5 million unit of shares at 5 ringgit per share from Petrol Umar Berhad. Hence, to record this transaction, we will debit investment securities account and credit cash account amounting to 7.5 million ringgit. However, on 30 June 2009, the quoted price per share had decreased by 25% per share and unrealized loss will arise. Hence, to record the unrealized loss, we will debit profit and loss account and credit investment in securities account totaling 375,000 ringgit. The unrealized loss in the profit and loss account hence will be transferred to the reserve account, and the journal entry will be debit investment fair value reserve account and credit profit and loss account. The second investment was on 1 January 2006 when Bank Syariah Malaysia Berhad acquired 400,000 unit of shares at 3 ringgit per share from Munway Berhad Company. To record this transaction, we will debit investment securities account and credit cash account amounting to 1.2 million ringgit. However, on 30 June 2009, the quoted price per share of the investment had decreased by 1 ringgit and 50 cent per share and unrealized loss will arise. Hence, to record this transaction, we will debit profit and loss account and credit investment in securities account totaling 600,000. The unrealized loss in the profit and loss account will be transferred to the reserve account, and the journal entry will be debit investment fair value reserve account and credit profit and loss account. For Telekom One Malaysia Berhad, Bank Syariah Malaysia acquired 800,000 units of shares from this company at 20 ringgit per share. To record the acquisition of the shares, we will debit investment securities account and credit cash account amounting to 16 million ringgit. As at 30 June 2009, the quoted price for these shares had increased by 5 ringgit and 50 cent per share, and thus there will be unrealized gain. To record the unrealized gain, we will debit investment in securities account and credit profit and loss account with total amount of 4.4 million ringgit. Same with the unrealized loss, this unrealized gain also will be transferred to the account reserve, so we will debit profit and loss account and credit investment fair value reserve account. Unlike the other three companies before, when Bank Syariah invested in ordinary shares, this time Bank Syariah Malaysia Berhad invested in Ijarah Suku on Tenaga Kebangsaan Berhad. They acquired 1.5 million units of shares from Tenaga Kebangsaan Berhad at 12 ringgit per share. To record the acquisition of these shares, we will debit investment in securities account and credit cash account with amount of 18 million ringgit. This suku investment will mature on 31st December 2009, and in order to record the disposal of the suku investment at maturity date, we will debit cash account and credit investment in securities account with the amount of 18 million ringgit as well. For the last company, which is Khazanah Rakyat Incorporation, that Bank Syariah Malaysia invested on, there will be no transaction as this investment is matured on 31st December 2010. This is because we are only required to record the transaction until 31st December 2009 only. For question B, it requires us to prepare the investment fair value reserve account as at 31st December 2009. The answer for the fair value reserve account will be as follows. We just need to enter the balance BD that been given by the question. The fair value shares for Munway Berhad and Petra Umar Berhad is on debit side because of the unrealized loss that we calculated previously, while fair value shares for Telekom One Malaysia Berhad is on credit side because of the unrealized gain. For the profit and loss, the question stated that 25% of the total reserve account will be distributed to the agreed ratio between shareholder and depositors. Hence, the total amount of profit and loss that will be distributed is 25% we times with 7,100,000 ringgit, that is equal to 1,775,000 ringgit. Finally, we get the balance CD amounting to 4,350,000 that will be carried forward to the next year. For question C, the question requires us to calculate the amount of profit that will be distributed among the shareholder and the depositor with the agreed ratio of 40% and 60% respectively. It was said that 25% of the balance of the investment fair value reserve account will be distributed according to the profit sharing ratio between the shareholder and the depositors. Hence, the total profit that will be distributed on 30 June 2009 is 7.1 million times with 25%, and we get 1.775 million ringgit, and the share of profit for the depositors will be 1.775 million ringgit times with 60%, that is equal to 1.65 million ringgit, and the share of profit for the shareholder will be 1.775 million ringgit times with 40%, and we get 710,000 ringgit. For the last question, which is question D, it requires us to define the main purpose of the above investment fair value reserve account. The answer is, the main purposes of the above investment fair value reserve account are to capture the cumulative net change in the fair value of an investment as long as it's still recognized on the financial statements of Bank Syariah Malaysia Berhad. The fair value reserve for investment will be maintained until the investment are sold. The investment reserve consists non-distributable profit, and such is used to ring-fence fair value gains or losses. Non-distributable profit need to ring-fence to ensure that they do not get distributed inappropriately and kept separate from distributable profits when there is a movement on reserve. That's all from our group. Thank you.